Hello everyone, this is Juan Sarmiento and today is Friday, April the 8th. Okay, the way I'm going to start today is by looking at our positions and see if anything needs to change, okay? So far this year we have made close to $9,000 and we are above the $100,000 mark, which means we have doubled our money since we started this a few years back. Okay, let's look at the trades starting with Akamai. Okay, let's go to the Analyze tab. Just by selecting here, provided that you have this selected yellow and yellow here, just the link, you can just click here and Akamai will show up in the Analyze tab. We don't need anything other than the risk graph, and this is it. And we can show all. Oh, these are candidates, so let's just show our current positions. That's what I was doing wrong. Okay, so we don't have Akamai as a position, but I have a list that we will we'll check it out and see if it's worth applying now. Okay, let's go with Apple first, and that looks good. May is the expiration, so we have plenty of time for that to expire, and the long-term options is July, and we are here at in the cone. So far we are, since the opening, about $82. Let's move on to Adobe. In the case of Adobe, again, May and July, so no reason to adjust that. I'm not going to increase the position, and we have $65 on that one. AXP, that's American Express, and our next expiration here is April the 22nd. Want to see how many days before that? Click on Add Simulated Trades and locate 14 days. And we don't need to do anything unless we are at or less than 7 days. Okay, so no need to do anything on that one. And then we go to Teradyne, and all we have here is a long shot. Let's see the risk graph. Yeah, this is about to expire next week, and we have taken all the money we're going to take out of that. If I close any of this, we're going to get $0, so leave it there as miracle lottery ticket. You know, these are calls, and the stock is trading at 110. At some point we rolled them up, so we made money before, and now they are just here, this as lottery tickets. You know, let's say somebody makes an offer for the company at $170, then suddenly these are worth something, but not anymore. Okay, all right, let's look at the trade that I have set up. You would notice that I had been doing for the last couple of years a collection of trades here, potential trades, and we can examine them, including Akamai that I just listed there. Okay, I'm going to start with Costco, and I already did the analysis. You can see the trade that I'm intending to put is this one here at $93.15, and that one lot of that cost me $9,315, which is 10% of my account, which is okay. All right, why? Well, let's copy that, paste it here, and here it is. And now I analyze that. Take a look at the trade now, delete what we had before. This is the trade at 600 points, and you can see that I have locked it at that price. We can open it that, and that's the current price. Okay, why is it that I'm confident that I can put 10% of my account, that I'm not going to lose the 10%? Well, if you look at here, let's say that the maximum possible loss will be here at the bottom of my smiley face on the put side, and that's $1,158. So it's really not 10%, it's more like 1% of my account, one and a little bit. Okay, so it's not that risky as it may appear at first glance. If I see this other side here, it's even less, $600. So that's how I'm counting on never losing any more than this maximum loss here. Yet I could make a whole lot more money. Let's say if volatility increases. Okay, so let's say adjust the volatility, and let's say, okay, adjust the volatility, an increase of 10% in volatility. It's not accepting it. That's curious. Okay, it's not working, so I'm not gonna push this. But trust me when I say that if we put 10%, well, let's reset this, okay? Reset slices and reset parameters, and then see if that will do it. No, it's not accepting it. But look at this, as I increase it like that, look at how the profits build with every 1% increase in the volatility. So if you, by some miracle, you get to 5-10% increase, then now you're getting into serious profits. Okay, let's say the market declines 10%, you would see a spike in volatility this big. So that's what I'm like to see, because then you get the most profit across the board on all your trades. But if we reset this, and let's say this stock, let's reset that, reset parameters. Let's say the stock goes up here to, let's say 68, 680, then you get $1,500, something like that. Okay, so and then you would adjust it so that then if the market declines and you have taken profits on the calls, then it declines, then you make additional money. That's the way it is. You benefit from the up movement, from the down movement, and from this up and down weight. The only way you can lose money is if the stock goes up and volatility declines a lot. Okay, and the up movement is not much, because even if it stays within this range, you may end up making a little money. Okay, so that's the principle there. Okay, now let's look at my chart here, and you see that the expected, this is based on earnings, you can see that the expected beat expectations by 11%. That's my calculation here. I put the expected, I put the actual, and the difference 0.3, which is 11.4% of the expected, of the expected, and therefore that says trade. You can read this at your leisure. It just means that I'm expecting a big move if you get 11% or more in the beating of expectations. Sometimes they don't even beat the expectations, but they guide higher, and that explains why the stock may go up 10%. You want the stock to go up 10%, and a 10% increase in earnings expectations is what I'm looking for. Then I enter the volatility, the back month volatility and the front month volatility, and the difference between the two, I average the two volatilities, as you can see, the front month and the back month, and the back month should not be too high. In this case, 0.75. If this is more than 3, meaning in percent, it would be too much, and I decline the trade or see how the other indicators measure up. In this case, 0.75 is acceptable, and I say trade. Then the liquidity is nothing more than the mid versus the ask. So when I say create duplicate trade order, I have the mid and I have the natural, and I enter that in my spreadsheet. Let me adjust this and enter that mid here in the bottom corner, right corner, 93.55 versus 95.75. That's 2.3%. It's not more than 3%, therefore I consider this to be a liquid trade. And then the current IV percentile, we just go to the trade tab, all products, and the trade tab will show me more data, and I scroll down to look at the current IV percentile for Costco, and that's 32%. 32, 33. And then this number should be 15, but in this current volatility environment, you will find no trades if you went for 15 only. So be careful though. But in this case, we have 3 greens and 1 orange. So I say, okay, let's go for it. Okay, so I'm going to enter my trade. And you can unlock it and at the current price, and if that doesn't fill, then you start bumping up your offer. Okay, so here this is working now. All right, now next, let's take a quick look at the market. It seems to be moving here. Let's activity here. Oh yeah, the SPY, the Dow's moving up. Volatility is declining a little bit. It's moving up here on the ES. Okay. All right. It looks like it might be bottoming prematurely, I guess. Okay, let's look at the trades that I have here. And I'm just going to look at the chart and see if I would reconsider trading any of these. Okay, starting with CRM. CRM, I considered trading that before. And let's go, oh, that got filled. Let's go to the chart here of Costco, and let's the chart, and let's put this into a daily chart. Okay, you can see that the volatility is way down here. That's good. The stock has been moving strongly and the earnings occurred here. Okay, let's move on to CRM. Okay, CRM, not a big mover. It's come down, but volatility is still at 36%. No, I'm not convinced. I thought it would be, you see this big move here, but now it's sort of going sideways. That's not what I like to see. We could wait until it makes a good move up, if it's going to do it at all. Let's do PayX. Let's see if I can change this. PAYX. Oh, it won't accept it for some reason. Okay, let's just type it here. Okay, this looks better. The volatility is down here at 26. Let's reevaluate that. I have my trade here. I might have to adjust it. I copy this, copy it from here, since I have it there, and paste it here. Order entry, there we go. Here is what we want to click, and then it copies it from my clipboard, and then I say analyze trade. Okay. All right, first of all, is that the good price? Well, how about the strike price of 140 first of all, because it will be more closer to the current price, obviously. So this is how I decide what strike price I want, the closest to the current stock price. Unlock it, and then we say, okay, September and May the 20th. So then I take a look at the expiration, May the 20th, 42 days. Yeah, that's as soon as I can get it. And the September is 161, also as soon as I can get it. These are longer term. You want to be closer to 90, because otherwise you're just buying too much time value here. But I suppose that's okay for this situation. Okay, then we evaluate everything else. Let's start with the earnings. They reported earnings 1.15 versus 1.04. I suppose I have that already. Yes, that's 10%. Then I check out the volatility skew under the Analyze tab. Here you have it. You can say Analyze Trade. It's already there. And here are my volatilities here at the bottom right corner of the screen. And so let's enter those over here. 25, 23, very similar to what it was last week. It doesn't change much, but the front month has increased. Excuse me. 23.2, 24.3. Okay, so yeah, that's a good skew. So we have trade. Let's look at the liquidity. Create duplicate. And we have 27.4 versus 29.8. That's not favorable. 27.3 versus 29.6. So that's too big. Okay, so that's a strike against it. And then let's see if the current IV percentile has improved in any way. Monitor tab, account position. Let's go to the trade tab, all products, and scroll down, and you see the current IV percentile is 43. So that, in that sense, is not a good trade, even though it's been up here. So we skip that. All right, let's go to FedEx. A quick look. No, see how that declined. Ooh. Okay, so that's not going to work. We want it when it's up or going strongly higher. FedEx. Akamai is the one that I wanted to check again. Akamai. Okay, that's moving nicely. The volatility has now spiked, and so this would have been good if we enter here, but if you enter it here, you never know if it was going to continue down. So you want it when the volatility is low, so that the spike you benefit from. So that won't work either. Oracle. Okay, Oracle, it is low right here. Do I have that trade? No, I don't. This looks more attractive. Let's take a look. Copy that trade. Click on this thingy, paste it, and analyze trade. Unlock it. July 15 versus May. Okay, July 15th is 98 days, so that's acceptable. May the 6th, 28 days, that's very acceptable too. So we have a good trade in terms of date. Okay, Oracle, let's copy that. What about the strike price? Currently at 81 and my strike price is 80. Yeah, that's probably correct. Let's paste that there. Oops, paste that there, and the price is 15.2. We could enter several lots on this. 15.2, 12 times 4. Okay, we can even put 5 or 6. Yeah, 6 will be okay, because we multiply that times 100 and gives us 9,072. That would be acceptable. Let's go check that the earnings 0.9999 versus 1.13. Yeah, that's 13%. Great. Let's look at the volatility skew. See if that's changed in our favor. No, it looks not favorable at all. Let's see, 30.8, 28.31, 26.71, 24.85. You see it right in the bottom right corner of your screen where I'm circling with my mouse, and that is not good. Okay, there's too much distance between those two volatilities. If that's the only thing, if the other two factors are okay, I could consider making the trade. Let's create duplicate. Okay, 15.07, 15.49. Okay, that's acceptable. Okay, and now the implied rule, the IV percentile, you go to the trade tab and scroll down, and that's 7%. Guess what? This will work. So we ignore this volatility skew. That's 7%. All right, so we have 3 strikes in our favor, so we're gonna do it. And create duplicate. So how many are we gonna do? Well, let me just show you. Confirm and send. Then you say multiple accounts, but in reality we're trading it in this one account, and we're going to increase it until this reaches 10,000 or less. Okay, 10,000, 7 won't do, 6 will do, send that off. And we'll wait until that fills. Let's see if there's any other that I will consider. Sienna. Sienna, again, low volatility. Is not really breaking out. It's sort of sideways movement. I'm not interested, quite frankly. I just don't risk it. Nike. If I don't like the chart, there's no point. That's a little better, but not by much. Still sideways. And tap. Yeah, this one was very good at first, but it's not. I want to see another movement, and perhaps it will have that movement in the days to come, but not now. Okay, that's all, I think. Let's go to the trade tab and monitor tab here, and I'm going to adjust this trade to see if it will get filled. And I increase the debit, let's say 5 cents at a time, until it gets filled. Okay, so we won't talk about it anymore. I won't take more of your time. If it does happen, you can bet that I'm going to try my best to get it filled. Okay, and all I'm going to do is increase by 5 cents at a time until it gets filled. That's how it's done. That's all for today. Thank you very much for joining me, and see you next time. Bye bye.